What is going on, guys? Stas here. Welcome back to another video. So I want to run through 7 stocks in this video, all of which just reported earnings. All of these companies just did. So we have to break these earnings down. We're going to break down the charts. And later, if we have time, we'll go over the indexes as well. So hit the like button. Make sure to subscribe and follow me on X and TikTok. Those are linked down below. And let's dive into it, guys. So check it out. We had a bunch of companies report earnings today, and the first one I want to go into is NIO, ticker symbol NIO. Let's go right into it. And man, NIO has been struggling, no doubt about it. This stock was at $16 per share back in August, and now it's at what, $5? $5 per share. And at one point earlier today, we were under $5 per share. We hit $4.78. So NIO reported, let's see here, guys, adjusted EPS of negative 39 cents, which beat the negative 51 cents expected, and they also beat on sales, $2.41 billion versus $2.29 billion expected. So beat EPS and they beat on sales. So double beat there, which is good. And it looks like here Q4 vehicle deliveries were 50,000, roughly up 25% year over year. Not bad. Let's see, Q1 revenue, they expect 1.48 to 1.56 billion. Vehicle deliveries of 31 to 33,000. Not bad. And yeah, it looks like they issued guidance. Not bad. They beat EPS, revenue, and it looks like we again sold off initially, but then rebounded and had a pretty decent day, 3% in the green. But overall, man, NIO is getting destroyed, and there's just so much competition in China when it comes to the electric vehicle space. I mean, we're seeing BYD starting to take over. Demand for Tesla slowing down. That stock's collapsing. You know, NIO, sure, they're growing nicely, but not nearly what they were doing, 2-3 years ago, right? So it's an interesting space. I'm staying away from it. I don't have any exposure to any of these stocks right now. So, we'll see. Maybe I'll get into Tesla at some point. I used to own it, not anymore. Maybe I'll get in it. If it gets down to the 150 range, I'll consider it. But for now, man, I'm on the sideline. And of course, that goes for NIO as well. So the next one I want to go over, guys, is Target, ticker symbol TGT, which, man, oh man, did it rebound, up 12% on the day, up $18, and it hit $170.47. And you guys remember what happened with Target a couple of months ago. We're not going to get into that in this video, but man, that company went through a pickle, and their stock sure did as well. You guys can clearly see that. And now we've been recovering as of the last 2 quarters. I mean, look, last time they reported, the stock was at $105. We covered this a couple of days ago, and it shot all the way to 130. Now it was at 150. It shot all the way to 170. So Target reported, let's see here, guys, where is it at? They reported in the morning. So looks like they ended up doing adjusted EPS of $2.98, which beat the $2.41 expected, and sales $31.92 billion versus $31.83 billion expected. So double beat for Target, and it looks like here total comparable sales roughly 4.4%, or is that negative? I can't tell if that, I guess that's a negative number. Yeah, so minus 4.4% comparable store sales for the U.S., or is that just in general? Looks like comparable negative 5.4%. And it looks like here EPS outlook 170 to 210 for Q1, which is right in line with the estimates for guidance. And sales, let's see, do we have sales guidance? Comparable sales -3% to -5%. All right. I mean, look, they're recovering, guys. The reality is they're recovering. And I mean, sometimes things like what happened to Target bury the company forever, but sometimes people just forget and it bounces back. And it seems like that's the reality of the matter right now. It's bouncing back. And there were other problems with Target. I mean, it's not just one thing or this or that. But it looks like they're putting some quarters, they're stringing some quarters together that are pretty good. and it's breaking out. The stock's now pushing towards the highs from, it looks like, 2022, which we hit right around 175, 180 that year, at least in the end of that year. So if that's able to break, guys, we could be seeing, who knows, potentially more upside on TGT. So CrowdStrike is another one that I want to cover in this video, guys, which, let's pull it up and see what's going on with CrowdStrike. Holy crap, man. So this thing went down 5% on the day, and now after the bell, it is up a whopping, are you ready for this, 23%. Oh my goodness, guys, 23% pop here after the bell for CrowdStrike. So it looks like EPS 95 cents, which beat the 82 cents expected. Sales 845 million versus 839. That beat as well, so double beat. They see adjusted EPS 89 to 90 cents for Q1 versus the 82 cents expected. All right, there you go. Guidance is strong. It's better than expected. And revenue 902 to 905 million versus 899 million expected. So guidance is strong. They double beat. Let's see, maybe 2025. Yeah, full year 2025 guidance is super strong as well. Oh my goodness, man. Full year 25 revenue guidance is 3.92 to 3.98 billion versus 3.05 billion expected. So very good guidance. And of course, again, the double beat for CrowdStrike. And this thing is on fire. It's breaking out of the highs. I think this is an all-time high, right? It's got to be. Yeah, of course. Yeah, all-time high is hit officially for CrowdStrike, which is awesome. And we'll see where it goes after this. Who knows? It could be, clear blue skies to 400 for all we know. Not saying it is for sure, but at this point, it's at all-time highs, and we just have to watch it. So CrowdStrike is crushing it. Awesome guidance. And ChargePoint is another one that we have to cover, which, man, talk about a downfall. This stock was at $35, I remember, a couple years ago. Yeah, look, $36 back in 2021, so close to 3 years ago. And now it's at $2 per share. I mean, this thing is almost forgotten about. It's kind of sad. I mean, this thing was one of the more popular stocks. It was talked about. It was taken seriously as an investment by certain people, at least. I never bought it personally, but I knew people that were, super all in on ChargePoint, which I never advise going all in on a stock. That's not my style, but if you want to go in, if you're that passionate about a company, I knew some people that were all in on ChargePoint, and man, it is down to $2. That's rough. It's rough. So let's see what they reported. It looks like they did EPS of negative 23 cents, which came in line. All right, not bad. Sales 115 million, which missed the 118 million. So they missed sales, and they see Q1 revenue of 100 to 110 million versus 126 million. So guidance is just not there, guys. Again, missed on revenue. That's not good news. And at this point, what the heck's going to happen with ChargePoint? Honestly, I wouldn't be surprised if they got bought out by some other big EV player. I mean, think about it. They have so many charging networks, or the network that they have, right? All the stations around the country. And, I forget if they're abroad or not, but either way, they're all across the U.S. They have valuable assets, if you think about it, guys, and this could probably be sold to certain companies out there. We'll see. But, yeah, I mean, this thing is not trending in the right direction, that's for sure. Maybe a reverse split would, do them well right now. That stock price at about $1, $2 is not looking too pretty. So, yeah, that's ChargePoint, guys. We also had BOX report numbers today, which is Box Inc. Let me pull up these numbers and see what this company did, guys. Looks like they did EPS of 42 cents, which beat the 38 cents expected. Sales missed, though, 268 or 260. Okay, barely. They barely missed. 262.88 million versus 262.97 million, guys. I mean, come on, whatever. They missed barely, but I guess they missed, and they guided for full year EPS for 2025 of $1.53 to $1.57 on revenue of $1.08 billion. which is pretty much right in line. A little bit short there on the EPS, but it looks like here, guys, the stock is where's it at after the bell? Looks like we are down a little bit, or initially we shot up. Now we're trending back down to where the stock closed. So keep your eyes on BOX here, right around the moving averages. It's actually a pretty interesting play. It's pretty beaten down. We're trying to fill the gap back to about 32 bucks where the stock was a couple months ago. So yeah, maybe we could play this thing. Well, not we. I'm looking at this to about 30 to 32. So keep your eyes on BOX. We also had Ross Stores report earnings. ROST is the ticker, and this stock's been crushing it. Not too sure if you guys have been keeping up with it, but Ross Stores, they just reported, let's see, they did GAAP EPS of $1.82, which beat the $1.65. Sales $6.02 billion versus $5.81, so double beat for Ross Stores. And let's see, anything for guidance, Q4 or Q1 rather, anything here, anything. Oh, there we go. They see Q1 EPS of $1.29 to $1.35 versus $1.27, so that's above the estimate there. Full year EPS of $5.64 to $5.89 versus $5.40. That's good. And not sure if they give sales guidance, but it looks like same store sales growth of 2 to 3%. That's what they see for full year 24. So Ross Stores, guys, looking pretty good. I would not be surprised if this momentum, were to continue. So ROST, keep your eyes on it. And of course, guys, with all these stocks, do your own research. Nothing's guaranteed. We don't know what's going to happen in the stock market. This is all my opinion. But yeah, that's ROST. And the last one here, guys, last but not least, is JWN, which, it is collapsing. Nordstrom is collapsing after the bell. It's right by the 180 SMA, which will be interesting to see if it recovers off that moving average. Time will tell. But, man, what the heck is going on here with JWN? So their stock is down, again, a good chunk. We're talking 10%. So it looks like they beat EPS, 96 cents versus 88 cents expected. And it looks like they beat on sales, 4.42 versus $4.38 billion. So what that tells me is it's got to be guidance, right? Looks like they guided for full year 24 EPS of $1.65 to $2.05 on revenue of up 2% to a decline of 1% versus a year ago. So pretty flat. In other words, versus the analyst estimate of $1.97. So the lower end of that range is a bit lower than the estimate. So maybe it's guidance. What the heck's going on? Maybe the stock just got way too overbought. Either way, we are noticing a sell-off here, and that's probably what it is. Stock got way overbought heading into earnings. We're seeing a bit of a pullback. It's still in an uptrend, guys. So let's see what happens here at the $18 to $20 level-ish range. I would say for JWN. Let's see if we get buyers. Maybe we get a rebound. Time will tell. What do you guys think? Let me know your thoughts in the comments. Hit the like button. Make sure to subscribe. And don't forget to get up to 15 stocks for Moomoo. Fund your account with at least $100. Using that link down below, you get 5 stocks. And fund it with at least $1,000. You get 10 more stocks, totaling 15 stocks. And each of those could be valued up to $2,000. Get on it, guys. The clock's ticking. And with that being said, cheers. I'll catch you all in the next video.